Welcome back to our channel, YouTube enthusiasts and savvy investors. Today, we're diving into the nitty-gritty of Buy Corp. Let's get into it. First up, let's talk about PR, or price-to-earnings ratio. Best Buy's current PR TTM is 13.19, while the average over the last 5 years was 11.95. What does this mean? Well, it tells us that Best Buy is currently trading at a higher valuation compared to its historical average. And looking forward, the PR FWD is 12.69. So, it's slightly more expensive than its historical norm, but still within a reasonable range for a company like this. Now, if you're wondering about growth, the PG ratio stands at 2.77. A PG ratio over 1 can indicate that a stock is overvalued relative to its growth, so this is something to keep an eye on. Ever wondered how much of the company the insiders own? Best Buy's insider ownership is a tiny 0.56%. This is pretty low, which might suggest that insiders aren't heavily invested in the company themselves. But let's look at something more promising: return on equity. Best Buy boasts a stellar ROE of 42.31%. This means they're generating great profit from their equity. And speaking of returns, their return on assets is 8.44%, and return on invested capital is 25.41%. All these numbers show that Best Buy is doing a fantastic job at turning investments into profits. Earnings per share or EPS is a crucial metric for investors, and Best Buy's EPS is $6.43. Looking ahead, EPS is expected to grow at 4.76% per year over the next 5 years. Not the fastest growth, but steady. Over the last 9 years, Best Buy's earnings per share have had a positive evolution with a compound annual growth rate (CAGR) of 10.63%, although there has been a downside trend since 2022. On the flip side, their free cash flow per share has been inconsistent, leading to a negative CAGR of -2.60%. Dividend lovers, rejoice! Best Buy offers a juicy dividend yield of 4.43%, with an impressive 18.46% dividend growth over the last decade. This means they're committed to returning value to their shareholders. However, their operating margin is 4.09% and profit margin is 2.9%. Not the highest, but they're managing to stay profitable. Over the last 8 years, both revenue and earnings have been pretty flat, which is not the most exciting growth story. This lack of growth has been translated to his market price since Best Buy has obtained a lower total return than VOO, S&P 500 ETF. When it comes to debt, Best Buy has a debt-to-EBITDA ratio of 1.53 and a debt-to-free cash flow ratio of 3.28. This suggests they have a manageable level of debt relative to their earnings and cash flow. In terms of stock performance, Best Buy has an average price return of 16.72% over the last 52 weeks. Their market cap is $18.35 billion, making them a significant player in the retail space. Finally, analysts are predicting an average price of $86.60 in the next 12 months, which is just a 2.1% upside from the current price of $84.82. But here's the kicker: I believe the fair value of Best Buy is $91.17, suggesting it's potentially undervalued right now. So, there you have it. Best Buy is a solid company with some great metrics, but also some areas to watch. Are you bullish or bearish on BBY? Let us know in the comments below. And don't forget to like, subscribe, and hit that notification bell so you never miss out on our latest videos. Thanks for watching, and we'll see you next time.